Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Luton, as well as Managing Director of International Content, Emily Parker. Good morning, Emily, and good morning, Lawrence.
Hey, good morning, Christine. How are you?
All-time high mode for Bitcoin.
Indeed.
It'll be interesting to see. Let's take a look. The CoinDesk Bitcoin price XBX index currently trading at $64,971. The number to beat from yesterday's all-time high was 66694. Bitcoin up, however, about 1% over the past 24 hours. And the CoinDesk Ether price ETX index is at 4215. ETH also coming close to its all-time high, just above $4,300. But ETH is also climbing in lockstep with Bitcoin, up 7% over the past 24 hours. And the new DFX, CoinDesk DeFi Index, is also charging ahead, trading at $624. It's up about 4% for the day. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So certainly, our top story in the past day has been Bitcoin hitting an all-time high of 66,694, as I mentioned. So, is this sustainable, Lawrence?
I mean, look, I think I've said a million times, it's like you just name a price and Bitcoin will hit it at some point. Obviously, that's kind of what we're seeing. Some of this might actually have to do with the market mechanics. We have things right now happening where the ETF and the futures price and the spot prices make it so that there are incentives for traders to get in on the market and to basically do all sorts of arbitrage, essentially, in a succinct way, arbitrage trades that would essentially push up the prices the way we're seeing it. That might come and fall back into line over time as that trade stops making profits and as more participants come in. So is it sustainable? Yeah, for the time being, maybe, sure. But
there's just so much investment in the space. If these ETFs get rolling, fund managers will have to start buying Bitcoin. If physical Bitcoin ETFs start appearing and being approved, there's just so much investment in this space. Like VC firms are, I was doing a chart the other day. They're investing way more than what they're investing in the traditional market space. And FTX also just having a huge raise, right, Emily?
Yeah, so FTX just raised $420 million following a $900 million raise earlier this year. I'm really curious what they're going to do with all this money. And it just sort of raises questions. Yeah. So it's an interesting trend. I mean, we're starting to see in the, supposedly decentralized crypto economy, the rise of some real kind of powerhouses. So that's definitely a trend worth watching.
Definitely. All right. Well, our next guest is the author of Crypto Dad, The Fight for the Future of Money, which documents former CFTC chair Giancarlo's fight to get Congress to acknowledge and respect cryptocurrencies. And joining us now to discuss is Giancarlo, now senior counsel at Wilkie Farr and Gallagher. Hello there, Chris. Great to see you as always. So perhaps you could comment on this all-time high. What is driving this surge in Bitcoin? Is it sustainable?
Christine, great to be with you and Lawrence and Emily. It's great to see you. And Emily, it was great to see you the other night at our book launch party. It's great to be with you this morning, especially today of all days. Yesterday, not only the all-time high for Bitcoin, but I think what I found very interesting was the volume of trading in the new ProShares ETF, which itself was a record for a new ETF, which confirms the extraordinary demand for exposure to Bitcoin that exists in the marketplace. And so for naysayers and others, it's clear that the public at large wants some exposure to Bitcoin in their portfolio, whatever that may be, for whatever reason that may be, whatever belief they have as to either the long or the short of Bitcoin. The amount of demand, the amount of trading volume yesterday in the ProShares ETF, to me, was as significant, if not more significant, than what Bitcoin crossing a previous threshold for its spot price. So quite remarkable.
Welcome back to the show. Nice to see you again. I just have a question about like where this ETF fits into sort of the larger regulatory picture in the US, right? So there's some controversy among the crypto community. Some are saying like, this is awesome. The SEC greenlit this. This is a sign of friendliness. Others are saying, this didn't go far enough. What's your take in terms of like where this fits into the light of like the SEC's general MO on crypto? And how do you feel like the SEC and Gensler specifically is doing in the crypto space so far?
So I'll come to this question of whether this is the right ETF to go forward from a market point of view in a minute. But what this, as your listeners know, this is a derivative on a derivative. It's an ETF on Bitcoin futures traded by under CFTC regulation. I must say I take personal satisfaction in the fact that the first toe in the water for the SEC to be a regulator of Bitcoin trading markets is to put their toe in the water to build upon what we did 4 years ago at the CFTC when we greenlighted the launch of Bitcoin futures. The CFTC, as I've said before, has almost 4 years of experience overseeing regulated markets for Bitcoin and a few less years for regulating Ethereum futures. The SEC has been active in enforcement actions of other things, but has actually not been a day-to-day regulator of regulated markets until now. So welcome to the club, SEC, and I hope you enjoy the water. The water's fine. It can be done. We proved it at the CFTC that we can operate regulated markets for crypto in a way that is sound, that is policed for fraud and manipulation, and that offers a product that the public wants. Now, as to whether the first product should be based upon Bitcoin futures or whether it should be based upon Bitcoin spot markets, that's a more complicated subject. Regulators are comfortable with looking to other regulators to rely on their regulation. In this case, the SEC relying on CFTC regulation. We don't have a regulatory scheme in the United States today for the regulation of spot non-securities crypto. And so to the extent Bitcoin is a non-securities commodity-based crypto, there is not a regulated spot market because the CFTC doesn't regulate spot markets. I know it's complicated, but that's the system we have. And so for the SEC to actually do oversee an ETF on spot markets, it might take some form of regulatory structure for them to be able to go there. And that is going to take time. As you began the intro, Christine, I'm an advocate for Congress to step up and put forward a regulatory scheme that not only has investor protections, not only focused on fraud and manipulation, but also is focused on promoting American innovation, promoting American engineering talent, promoting this new wave of the internet, this internet of value and all of its offspring, Bitcoin, Ethereum, cryptocurrency, stablecoins, as a solution to our existing legacy system, which is old, which is expensive, which is exclusive, to modernize it, to address some of those shortcomings in our existing system. I think if we approach this as an opportunity, we can do that. And I think that's where Congress needs to step in and tell regulators, not only do you have your traditional missions of policing fraud and manipulation, protecting investors, but you also need to focus on enhancing innovation and furthering American innovation in this important new 21st century technology.
So I was wondering if you could weigh in on how you see the SEC proceeding under Gensler. And do you agree that Gensler perhaps needs oversight authority from Congress to approve a Bitcoin spot ETF?
Well, I won't debate with you the scope of the SEC's authority. Chairman Gensler has a broad view of that, and I understand that. I think chairs traditionally do that. What I would say is this. Chairs have a lot of discretion in how they enforce their regulations. At the CFTC, we exercise that discretion. In the area of retail financing, of retail commodity transactions, we recognized that our rules were not terribly clear. They were written for an analog world, and they didn't really apply in a digital world. And so we actually paused, and I detail this in my book, which I think your readers will find interesting. We actually paused enforcement efforts in terms of retail transactions, finance transactions, while we took the time to rewrite our rule set and repropose them. And then we gave the market a few months to adjust to those new proposals before we resumed enforcement action. And my point is that chairs and agencies have a fair amount of discretion. They can choose to enforce the letter of the law in every specific case, or they can use some of that discretion to recognize that there's something new here. The rules we have on the books don't really apply well, and maybe we owe it to the market to actually get some of that regulation more fit for purpose before we go in with that 20-pound boots of enforcement.
Because that's something Congress has to do.
Well, ultimately, Congress does need to step in. But until Congress actually writes rules, my point is that chairs have discretion with their existing rule set, which is all we have for now until Congress actually steps in.
So, Commissioner Giancarlo, the President's Working Group is putting up some guidance, or they should be putting up some guidance at some point on stablecoins. Do you think that Chairman Gensler basically punted by approving a futures ETF and to wait for the stablecoin report and guidance to come out? That's the more specific question. And then on a broader question would you recommend that a new agency be formed for cryptocurrencies and digital assets?
So on the first question, I don't think the SEC needed to wait for that report to come out. Those ETFs have been before the SEC for years now, and I think they had every authority they needed to go forward with the ProShares one and hopefully a few more in the weeks and months to come. On the second point is what I've advocated for, and I talk about this in my book, is actually a Congress to authorize both the SEC and the CFTC to develop a joint entity, a bureau, a cryptocurrency bureau, which would be a joint venture between both the SEC and the CFTC, combining the SEC's traditional jurisdiction for investor protection with the CFTC's authority for orderly markets free of fraud and manipulation. And then what we could do, and I think this would be very important, whether it's the PWG, the President's Working Group, or the administration itself, needs to make clear that the United States has a public policy interest in furthering innovation in financial services. We need to recognize that our existing system has major shortcomings that exclude 5% of our population, that provide a tax on our financial activity that needs to be addressed. And we can do that if the administration and Congress would make clear that there's a public policy interest in promoting innovation alongside with policing markets for fraud and manipulation and protecting investors. If we can get that balance of public policy right, and I think with a dedicated bureau staffed by both the SEC and the CFTC, during my time at the CFTC, we started an ad hoc CFTC SEC working group focused on crypto, a crypto working group. Jay Clayton and I put it together. And it worked, and we can do that again.
But given the fact that crypto touches on so many different aspects of the economy and so many different bureaus and so many different agencies and departments are somehow affected by crypto, wouldn't it make sense to have just a completely separate agency to do all that? So it's not just the SEC and the CFTC, but something more akin to its own department. Its agency.
So, yes, Lawrence, I spent 5 years in Washington. I learned a few things. One of the things is every agency has to have a sponsor in Congress, right? The CFTC reports to the ag committees, which are composed of mostly Midwestern senators and Congress people. The banking committees in the House and the Senate are composed of folks from the East and the West Coast. There are regional interests to be brought to bear. A new agency is going to need a new congressional sponsor, and there's a lot of politics involved in that. Now, maybe from an organic point of view, that is the right way to go, but I think that will take more political maneuvering and more consensus building in Congress at a time when it's very hard to build consensus in Congress over anything. So I'm sorry, I hate using paths of least resistance, but sometimes you need to. And I think the path of least resistance may be to rely on the existing power structure. The ag committees and the bank committees can get together and delegate additional funds for a new bureau between the two agencies. If we're going to create a new one, it's going to need as Senator John Kennedy says, a daddy in Congress. And I'm not sure, quite frankly, who that daddy would be right now.
Any interest in running for Congress, Chris?
I think, thank you very much. I certainly think my Washington days are behind me.
Behind you. All right, fair enough.
Well, never say never. You never know what the future brings.
I wanted to ask you about this. Crypto lenders Celsius and Nexo have received cease and desist letters from the New York Attorney General. Can you say anything about the state issues around crypto lenders?
No, and Christine, as you know from my previous experience, I tend to, as a former regulator, not comment on enforcement matters that are ongoing. For one thing, I don't know enough to speak credibly on what's behind it from either the recipient or the sender's point of view. But I do think right now we are in a phase where many firms are receiving subpoenas. A lot of those are information requests, not necessarily a negative, but these are the times we live in right now.
Finally, Chris, would you characterize the U.S. regulatory environment toward crypto as generally overly risk-averse or welcoming toward crypto? Just what is your big picture characterization?
Yeah, that's a great question, because I think we're still working it out as a country. Quite frankly, I'm amazed at the amount of fear and loathing about crypto by some people I encounter. And on the other hand, the amount of enthusiasm and excitement. I've said this in my book. I actually think we're going through another period of generation gap. So I grew up in the 70s, and we used to talk about a generation gap then. It came out of the 60s over civil rights. Whether it was the civil rights movement in the United States or the war in Vietnam, we talked about a generation gap. My generation felt that our older generation just didn't get our concerns about civil freedoms and the war in Vietnam. Well, we've got as big of a generation gap existing today between young people who have lost faith in the trusted institutions of the past and see a decentralized consensus, algorithmically based consensus building mechanism as the way to truth. And yet an older generation that still believes in, that a building's got to have limestone pillars in front of it to be a truth developer. And so there's a huge generation gap today that exists, and it's working itself out in the policy development for crypto. Those who are wedded to the old ways of developing truth and of institutional approaches are very resistant to this new innovation. And people that are younger see it completely different, but not all people are younger. There's a few of us older who get the joke, but there's a real generation gap today when it comes to, it's not just crypto, it's DeFi, it's decentralization, it's neo-banking, it's the whole panoply, it's the whole wave of the internet of value that's taking place today that is just, it's as startling for people that are wedded to retail shopping as was online commerce. What the internet did, it's naive to think that the internet is not going to do to banking and finance what it's done to retail shopping, what it's done to photography, what it's done to communications, what it's done to transportation. It's going to, and that change is going to take place. And yet, nothing happens overnight. It still takes time. And we've got a lot of folks that understand the legacy system and don't quite understand this new innovation. And that's just got to work itself out in the public domain and the public dialogue. And that's what we're seeing today.
Well, we see from Congress that there's a lot of, and among policymakers in general, there's a lot of skepticism over stablecoins, a lot of scrutiny. Facebook and Paxos are also forming a partnership, and that is kind of being frowned upon. I wonder, as part of the Digital Dollar Foundation, is there any update with that? And have you been in touch with the Fed as they get a report on stablecoins out ostensibly soon?
So I'm so glad you asked, Christine, because just yesterday, the Digital Dollar Project announced its first executive director, and it named Jennifer Lassiter, who was head of the innovation lab at the FDIC, and before that was part of the innovation team at the Consumer Finance Protection Bureau. Jennifer Lassiter is now going to serve as the Digital Dollar Project's executive director, and she brings enormous energy, thoughtfulness, intelligence, and dynamism to this role. She is going to spearhead those pilot projects that we announced in May and that will soon be announcing completion of our first few pilot projects. And Jennifer will be spearheading that. She'll also be the Digital Dollar Project's voice on Capitol Hill and in the administration and with states and others about the work of the Digital Dollar Project. You know, we formed the Digital Dollar Project to be the voice of the private sector as the public sector develops digital money. In my book, I say that just as at the end of World War I, a French premier, Clemenceau, said that war is too important to be left to the generals, in my book, I say money is too important to be left to central bankers. Notwithstanding their best intentions and their altruistic motives, at the end of the day, society has got a big stake in what the digital money of the future looks like. And that's why yesterday, in addition to announcing Jennifer Lassiter as executive director, the Digital Dollar Project also put forward a paper outlining some of the privacy values that need to be built into any central bank digital currency, especially a digital dollar. Those privacy principles are people's economic activities must be private with a digital dollar and not subject to censorship by government. They must be free of surveillance.
And are you talking to the Fed or policymakers to get those views across?
Absolutely. So copies of our policy principles have been distributed to public officials, and we are in active engagement constantly. Now, we're very much looking forward to the paper that's going to come out of the Boston Fed, and the Digital Dollar Project will react to that.
All right, great. Chris, we got to wrap it there, but very fascinating stuff. Also, we know we got your nickname, Crypto Dad, came after Thanksgiving. So very curious about what you're going to talk about Thanksgiving, this coming Thanksgiving. If it's NFTs, we'll call you NFT Dad after it. Anyway, Crypto Dad, The Fight for the Future of Money is the book. That was former CFTC Chair Giancarlo, thanks so much for joining us. Coming up, checking in on Asia and the crypto markets update with Jacobi Asset Management and their new physical Bitcoin ETF for institutions in Europe. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, October 21st, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Well, Bitcoin hit an all-time high of just over $67,000 Wednesday evening Asia time. And that's seen the wider crypto market on a roll right now. We're going to take a look at what's driving that surge and a whole lot more coming up. Let's get you up to speed from Asia to the world. First up, after keeping the industry in suspense for the last week, Bitcoin finally hit a new all-time high of $67,276 according to data from CoinGecko. The price leapt over 5% in just 3 hours to hit the highest it has traded since April, just before the mid-year crash saw the entire market plunge. Forecast News' Lachlan Keller takes a look at what that means for the wider crypto market.
Bitcoin wasn't the only cryptocurrency to surge. Ethereum and other altcoins followed closely, with Ethereum breaking the $4,000 mark. It was hovering around $4,150 Thursday afternoon Asia time. That's around $200 below its all-time high. One expert told Forecast News Bitcoin's upward trend is set to continue.
If you look at the way Bitcoin has performed or behaved after you break all-time highs, typically it goes a lot higher real quick. So it's not like maybe in traditional assets where you've just edged above all-time highs and then you retrace. Typically, a lot of people are bullish and thinking we're due for another leg up, another ramp up. I expect prices to keep on going up.
Jonathan says the launch of the Bitcoin futures ETFs has helped drive the price up, but with inflation picking up, a lot of people are also looking at Bitcoin for a hedge. He also says that within the industry, the chatter is that the focus is cycling towards Ethereum.
The next bet is, will we have an Ethereum ETF, basically? So you can see that sophisticated traders are already starting to transition to another asset, a new trade that might have more upside, more potential.
Jonathan says he's seeing evidence of that in the derivative space, with options on ETH getting a bit more bullish, and he believes that will ultimately benefit altcoins too. For Forecast News, I'm Lachlan Keller.
Meanwhile, more of the world, despite COVID quarantines and strict travel rules, are opening up thanks to the digital revolution. It's happening right here in Asia. Fancy visiting Korea's latte world, but can't wait for the border to fully reopen? Why not head there virtually? Latte World is one of the largest and the most beloved theme parks in Korea, and now it's opening a Metaverse version. Forecast News' Danny Park has more.
Located in Seoul, South Korea, the Lotte World amusement park is visited by 8 million people each year. Now, Lotte World is bringing Magic Island, the outdoor section of the park, to the Zepeto Metaverse. Upon entering the Lotte World map on Zepeto, users can experience the theme park's classic attractions such as the landmark Magic Castle and thrill rides Gyro Drop and the Atlantis Adventure roller coaster. As the park is also popular in Korea for its Halloween events, the opening of the Zepeto Lotte World will be Halloween themed, with zombified avatars roaming around the map welcoming visitors. Lotte World says it expects the virtual theme park to be the new hotspot for millennials and Generation Z users, and plans to utilize its contents to diversify its businesses. For Forecast News, I'm Danny Park.
And finally, the Metaverse, definitely a hot topic today. Hong Kong-based Metaverse, blockchain gaming, and NFT company Animoca Brands has closed a $65 million US funding round at a pre-money valuation of $2.2 billion. Animoca says this fresh capital will be used to fund acquisitions, product development, and licenses for popular intellectual property. Animoca's blockchain game projects include Rev Racing, F1 Delta, and The Sandbox. Investors in this round include Ubisoft Entertainment, Sequoia China, Liberty City Ventures, and Token Bay Capital. Blockchain gaming and NFTs have seen a phenomenal growth this year, with DApp Radar's Q3 2021 industry report saying that Axie Infinity became the most traded NFT collection ever, with its historical trading volume surpassing, get this, $2 billion US. The Metaverse is nowhere and everywhere, and it's taking itself to the bank. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager. Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XBX index is trading at $65,348. Bitcoin is up about 1.5% over the past 24 hours. And I think I misspoke previously. The all-time high to beat is actually $66,974. The CoinDesk Ether price ETX index is right now at 42.58, also nearing the all-time high of over $4,300. ETH is charging ahead, up 8% over the past 24 hours. And the new DFX, CoinDesk's DeFi index, is at $628, also making an advance of almost 5%. Joining us now to discuss the crypto markets is Jamie Khurshid, founder and CEO of Jacobi Asset Management. Hi there, Jamie. Good to have you on. So Jacobi recently won approval from regulators on the island of Jersey to launch a physically backed Bitcoin ETF. Very exciting. Congratulations. And it's only open to institutions when it launches, and there's plans to list the ETF on SIBO in Europe. So just off the bat, what is your outlook on Bitcoin?
So thank you very much for having me. The first point is that it was Guernsey, not Jersey.
Sorry.
We have a few Channel Islands, and we were working with the Guernsey Financial Services Commission. Fantastic regulator, top tier, and did a wonderful job working with us over the last 9 to 12 months to get this over the line. Going back to your question, what is the outlook? Funny enough, I feel like crypto has been a bit of a self-fulfilling prophecy, and I'm listening to Chris earlier. It does feel like if somebody puts a price up there, and Lawrence said this as well, it will hit that price at some point, because there has been this concentration of liquidity in certain sort of, I guess, what we used to call whales' hands. And for me, being in crypto has always been a bit sort of that risk of this manipulation from these larger organizations doing whatever they will to benefit themselves. So my outlook for the crypto markets is really a very positive one, because I think now with this ProShares launch, which was fantastic, with our approval from the Guernsey regulator to list on CBOE Europe, having a physical ETF on with Bitcoin as the underlying asset, that's only going to do one thing, which is drive mass adoption, and it's delivering a regulated product that the firms we all want and love to come into this space need. And I think that's exactly now we're starting to see where we're working together as a sector. We're trying to deliver these products, and with this mass adoption, we're going to see the volatility sort of drop and level out, and really try and sort of de-risk that exposure that we have had in the past 10 years from having whales involved in this asset class, or actually driving it from the beginning.
Jamie, first of all, greetings from New Jersey. But second of all, how much of this week's activity do you think is enthusiasm versus traders taking advantage of specific structural issues in the ProShares ETF, and basically pushing the price higher for something that it might not necessarily be related to the overall market enthusiasm? How do you weigh each aspect?
I think that's the difficult thing, Lawrence, is that you don't really have any obvious driver at the moment, and I feel like the recent gains and recent rises are fantastic, because it's demonstrating that there is a demand there, and of course, ProShares getting almost $1 billion in the first day of interest, that's significant. We're seeing the same in Europe with our ETF, and on the pre-funding side, we're seeing some pretty significant numbers coming towards us, and there is demand there. And that demand, again, I don't like to talk about pushing prices up or down. I think that the market will determine the price, and as more participants come in, as there's more actors coming in, that price volatility is what we're going to get rid of, and that's really the risk that I feel we've solved. In fact, we're solving a lot of risk. We solved the technology risk, the volatility risk, the counterparty risk. But besides that, I feel like we're not here to drive the price up, and we're just trying to sort of mitigate the risk of others manipulating the price.
Jamie, can you talk a little bit about the outlook for for the many other coins out there? I mean, the recent days all you've been talking about is Bitcoin, and it's true that the charts have generally been a sea of green. It seems like everything's kind of the rising tide lifts all boats or whatever. But what is your outlook just for some of the? Do you expect that we're going to see a lot of correlation going forward with Bitcoin and other altcoins?
Yeah, unfortunately, that seems to have been the case since day one. When Bitcoin goes up, everything goes up. And I would love to, for me, have maybe it's funny to say this, but sort of Bitcoin is sort of taken the limelight. And whilst we've launched a Bitcoin ETF, purely to service the demand and the fact that there is actually a majority sort of interest in that space. At some point, it would be nice where you could start to decorrelate Bitcoin from other sort of digital assets, from this DeFi world. I think, again, as maybe we're asking too much of it too soon, because it is still nascent. If you look back, we're only 10 years in. We have to give it a bit more time, and this is kind of what bugs me about some of the actors in crypto, some of the other companies, is that they're already being competitive, and it's like, well, I don't understand why there's this ultra competitive nature to put people down when they develop something that they haven't done. I think as an industry, for us to get to be adopted, and for this decorrelation to come into effect, for everything to have its own, I guess, its own sort of journey without being tied to one word called Bitcoin. I think that's really where we need to get to. And we need everyone to sort of work together to demonstrate to the regulators and to all the investors that actually this is a safe asset to get into, and it's a safe way to get into it, and it's readily available and tradable as any other asset class.
That's a collaborative attitude. Hopefully the industry hears it out. Thank you, Jamie, for joining us. We're going to wrap it there, but that was Jacobi Asset Management CEO Jamie Khurshid. Time to now check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. All right, so We also have some additional Bitcoin future ETFs to begin trading as soon as tomorrow and Monday. What can you tell us about that?
Good morning. Yeah. So yesterday we saw regulatory filings from Valkyrie and Van Eck, basically saying Van Eck will begin trading on Monday, October 25th. So that's this upcoming Monday. Valkyrie has said it intends to begin trading tomorrow. So, actually going live a little bit early compared to the federal date it might have had, otherwise had to abide by. And, we saw yesterday there was a huge amount of demand, even on the second day, for the Pro Shares Bitcoin Futures ETF. So remains to be seen how these two new ones do. But, if this demand keeps up, then they'll probably have a pretty solid, first day of trading as well.
So Nick, that'll be two more. How many do we have roughly in the pipeline? Do you recall? I mean, obviously everyone and their mother is trying to put one together now, including my mom, I think, is probably working on one in her basement.
Yeah, no, there's quite a few. There's more than 40 overall crypto ETF applications. So that's spot, futures, Bitcoin, and Ether. And, there's like a couple of random ones, NFTs and, DeFi stuff in general. I don't remember how many specifically are looking at Bitcoin futures, but I think it's around, there's more than 4 or 5. Invesco dropped out, so that was going to be the second one to go. But, right now we're probably looking at, a small handful for sure by the end of the year.
Well, looks like the floodgates have been opened. Thank you, Nick, for the update. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Time now to check in with Crypto Twitter with our tweet of the day. This one from Polina Marinova, founder of the Profile Read, tweeting, in honor of Bitcoin hitting an all-time high, here's the infamous photo from 2018 when Anthony Pompliano and I didn't have a couch for 2 months because Bitcoin was a better investment. It must be rough sometimes being married to Pomp. All right, that's it for our first move. At least get the girl a couch. 2 months, really? Thank you, Emily Parker. Thank you, Lawrence Lewitton. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon are the folks from The Hash. You're watching CoinDesk TV.